We're here on the streets of
Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Leroy Sr. and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In Phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, Phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good evening, everybody. How y'all doing? Hopefully everybody is doing well today. Who that knocking on the door? Empire Trade is knocking on the door. Welcome in. Welcome in. Welcome in. Welcome in. Y'all excuse me. I just woke up from a nap. I was sleeping so good on that couch. I did not want to get up and come in here and get on Al Gore's internet. I really did not. I was sitting there, I was like, man, do I really feel like getting up and getting on Al Gore's internet tonight? I said, you know what? Let's go ahead and do it. Let's finish the week off strong. Good evening to everybody. If this is your first time tuning in, it's a game tonight. Somebody said FSU game at 7. I ain't even looked at the schedule. I ain't looked at the schedule for this week. Let me see something. On a Friday night. Man, we do play today. Play Virginia. Play Virginia tonight. I know we played University of Miami, play the Hurricanes on the 4th of October. I knew that one right there was stuck in my mind. But man, I hate when they be having like college games on like weird days. College football is a Saturday thing, man. I sit down on Saturday and I watch the game. Man, appreciate that. Appreciate you for letting me know that, Steve, because now I know. And I would have missed that. See what? All right. Now, what's going on? What's going on? Sorry, y'all. I look down at my phone and I see all them little bubble notifications. Like, man, that drives me crazy. I don't know about y'all, but I can't stand when I be having little red bubble notifications on my phone. I can't stand it. I got to clear them off. It's like some kind of OCD thing with me. I can't stand seeing them little red notification bubbles. Now that I'm thoroughly uh distracted and off track, good evening. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome and give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., aka Aranya Grande. That's just Big Spot if you don't know Abdel Espanol. I saw a comment pop up over there. That's why I stopped for a second. And you're tuned to another episode of the Price Action Recap. This episode of the Price Action Recap is being brought to you by none other than the Smart Money Manuscript, the course that was created by myself. I put a lot of blood, sweat, and tears into it, so I'll appreciate it if you're interested in. Matter of fact, just let me. I'm gonna show you. I'm gonna show you. For those who do not know what the Smart Money Manuscript is a course that I put together, and it can be found on the WAP platform. Right. The first description and the link below is a link to the Smart Money Manuscript. It is $69.99. That's the first thing everybody want to know. How much is it? $69.99. Right. It is I went through and I thought about all of the things that I ever talked about on my YouTube page. All right. And I put together one concise course. It is made up of 5 separate chapters, 40 lessons. Now, the 40 lessons are a combination of video lessons, right? And quizzes, right? So there's not 40 videos to watch, right? You have a video, very short video, straight to the point, then a quiz. You have a video on budgeting, right? And then a quiz to test your knowledge of what you just looked at, right? You have a and you have to get on each quiz, you have to get at least a 75 in order to pass. So you have to understand what you're doing in order to pass the quiz. Got to get at least a 75, right? I was going to make it like you have to get like at least like a 90 or something like that. But I was like, I'm going to make it. I'm going to stick with like the school system, and, C students can slide through, So 75% in each quiz is only 5 questions, right? So you got a very short video and a quiz, short video and a quiz, right? This helps you test your knowledge along the way. We start out with the basics about money, budgeting, banking, taxes, right? And then we move into a little bit more advanced. We get into brokerage accounts, right? We get into how to figure out how much you need as an individual for your own self. What's the number that you need for retirement? We get into that. Talk about how to figure that out for each individual person. We talk about fundamental analysis. We talk about technical analysis, right? Just an intro to it. But just like everything else, you got a video, you have a quiz, right? You got a video, you have a quiz. All right. So we're getting a little bit deeper now. And then we get into, actually talk about portfolios, right? What types of portfolios you're going to have? Retirement portfolios, regular taxable accounts, and, putting together your portfolios. We talk about leveraging your capital with tools like options and futures, right? We talk about trading options, talk about trading futures, leveraging your capital, right? And then we get to the meat and potatoes, what most people want. We get into those infamous ICT concepts, right? And I'm not repurposing or rebranding Michael's content. This is just my understanding of the things that he taught. Nice, concise videos, right? See, smart, short videos, 3 minutes. The longest video in this entire thing, the max length you have to watch for a video is 15 minutes, right? The PDub matrix, that's a 15-minute video. And I think there's another one that's the longest. Everything else is 3, 4, 5, 6 minutes. All right. PDub matrix, that's a 15-minute video. Trading options, that's a 13-minute video. Right. Those are the 2 longest videos throughout the entire course. Right. And not only do you get everything that I've ever talked about on my channel in a nice digestible chunks, along with quizzes to test your knowledge, you get access to me at no additional charge for your mentorship throughout it all. Every second Saturday, right, at 11 a.m., right, we meet here in the SMM Live channel. SMM in this case does not stand for Smart Money Manuscript. It stands for Smart Money Mentorship. Every second Saturday, right here at 11 a.m., we meet here and I answer your questions pertaining to the Smart Money Manuscript. Anything you want to pick my brain on dealing with the Smart Money Manuscript, you have your opportunity for mentorship, all for the low cost of $169.99. Just pay $69.99 one time, and then you got access to this course and you got access to me. The access to me is invaluable. I can't even put a price tag on it. And I'm not tooting my own horn. All right. I'm not tooting my own horn. All right. You can ask the gang. You ask the gang. The gang, they gang. We had an opportunity. We did a Pick Tim's Brain session today. If you was in the Pick Tim's Brain session today, put a 1 in the chat or unmute inside the Zoom and say, I was there. Speaking of the Zoom, there's a link pinned to the top of the chat. Right. That's that.
I was there.
Deborah was there. Right. Deborah is one of my favorite people to pick on in the gang. If you have thin skin, you cannot be a part of the gang because I like to pick on you and call you up in front of the class and make you speak. So if you're bashful and you're embarrassed of people calling your names, you can't be a part of the gang. But Deborah, today's Pick Your Brain session, was it worth the price of admission in your humble opinion? If you had to pay for it, was it worth the price of admission?
Yes, it was.
Okay. She said it was worth the price of admission, right? So you have that same unrestricted access to me inside the Smart Money Manuscript every second Saturday at 11 a.m. right there to me. Ask your questions about the course. If it's something you don't understand or something you're not sure about, this is your chance to ask your questions. Now, don't get it twisted and think I'm just going to get in there and just start running my mouth. If we get in there, you ain't got no questions, hey, we just going to hang up the call. Hey, all right, see y'all later. But $69.99, first link in the description below. Share it with your friends, share it with your family. Buy it for yourself, right? Buy it as a Christmas gift. Buy it as an anniversary gift. Buy it as a birthday gift. Buy it. Help me feed my teenage boys. They hungry. They eat a lot.
Joking joke. Tim, you said $69.99. What is it really worth?
Man, it's invaluable, man. It's
Invaluable.
invaluable. It's invaluable. Let me tell you like this right here. All right. I ain't gonna hold you. Straight up, real deal Holyfield. If I wanted to, I could charge at least $4,000 for this course. At least. Based off of courses that I have bought myself. Right? Based off of courses I have bought myself, I can charge at least $4,000 for this course. Right? Somebody told me I like showing. Somebody said I was on the stream and Tim liked showing off this plaque. See this plaque right here? This plaque, right? She said, "Oh my God, I was on the stream and Tim liked showing off this plaque." You see this plaque right here? Anybody who knows what this plaque is from, right? They know that it ain't cap when I say this, right? If you have one of these, right, that means you paid at least $4,500 for a course. Because to have one of these, you have to have been in a course back in the day that when I bought it was $4,500. Right? And I earned one of these right here and they sent it to me, right? So based off of courses that I've personally taken and personally paid money for, I could be charging at least $4,000 for this course. But I want to make financial literacy affordable for everybody. So it's $69.99, $69.99, right? And it's people in the gang that's got that same plaque, right? It's people in the gang and it ain't no shots at nobody. I can't say that course wasn't for me because my own personal opinion is that it's that target audience for that course there. It is like women. It's women is their target audience. And I would even go so far as to say a more niche audience of that is like scorned women. That just, hey, I you know, because I every time I pulled up to a class, I felt like somebody had my huevos and was trying to cut them off. You know what I'm saying? I'm just saying. I'm just saying. Right? And I understand women may feel a certain way when men be in charge of things because sometimes as men, we don't understand how we're talking and how it affects women, right? There are women, you know what I'm saying, that when they're in charge of things, they talk a certain way and they don't understand the things they're saying, how it affects men, right? So no shade. I wish everybody well, but it just wasn't for me, right? You know, I, I let y'all do y'all thing over there, women. I love you. Power to you. I support my Black sisters in their businesses, but y'all do y'all thing over there. Okay. Now, based off of experience, at least 6,000, right? At least 6,000. Oh, yeah. Oh, we got some gang members that They said, yeah, multiple people in there. Said it was in there too. Let me ask y'all. Let me ask y'all, right? Let me ask y'all. Oh, I see my nephew in here. I see my cousin here. What up, cuz? What up, nephew? It's a Zoom link at the top of the chat. If you click on that Zoom link up there, you can come over here and get in Zoom. You can unmute and ask questions. You know what I'm saying? Whatever, whatever. Let me ask y'all what you feel like it's worth based off. I already know you ain't even did the course. I know you got it and it's just sitting there. I know you ain't even did it. For those who actually going through the course,
Excuse me.
what what do you feel like it's worth? Right? What do you feel like it's worth? Based off things that you've seen in the industry, right? Based off things that you've seen in the industry, what do you feel like it's worth? Hmm? Anybody?
Honestly, I was asking how much it was worth because since you giving it away, I was thinking about just taking all your stuff and putting my face on there and just putting the price on it on the whole nother platform. You
Always your
know.
own. It's always your own family.
You know what I mean?
It's always your own family. You feel me? Right? I don't know. Somebody might as well reap the benefits.
Okay, Jada, feel me. If you're Jada, feel me.
All right. All right. She feel you. All right, man. Don't nobody want to share. I was just asking. I want to know if anybody want to share. Don't nobody want to share. We got Lump up in here, as y'all hear. We got light skinned Deborah in here today. Um, if y'all don't know light skinned Deborah got those curls popping in her hair, baby. They popping. Got that thing parted. That thing is kind of like it's not it's like when you comb it and it had like a little comb part over here on this side, right? And then that thing hook around like this right here and come down. You know what I'm saying? That got a little earring hanging, them curls popping, baby. we got Mike Pence fly up in here with Empire Trades. We got Seawalk in here. We got Jada up in here hating with Lump. We got Kim holding down the #1 top fan on the U of the tube. We got Here to Learn and Share at the #2 top fan. Oh, wait a minute. Is it Here to Learn and Share or is it Steve? I see both of them say the #2 top fan. We got my cousin up in here. What up, cuz? I said that. We got Michelle Tucker up in here. I ain't seen Michelle in a while. Michelle been gone. She been MIA. We got my nephew up in here. What's up, T? Hey, I see more numbers than I see names, but them all the names that I see. So that's all I'm gonna say. We're gonna go ahead and share the screen, and we're gonna start talking about this price action. Right?
Hey Tim, I ain't finished the course yet, but the hell of a course so far.
I appreciate you, Seawalk. Seawalk almost made me cry, y'all. Right? Seawalk almost made me cry. I'm gonna tell y'all why Seawalk almost made me cry. Right? For those who don't know, right? If you were a part of the gang before, like the day I announced that I was doing the Smart Money Manuscript, right? I said there was going to be a window of time when you had access to the course for absolutely free, right? I said you can go in, sign up for the course for absolutely free, no pressure, because this is all material that we have covered prior on the course. I mean, on my platform, right? Because I've done workshops, I've done like mentorships, I've done different things, and I got a very small community, and they support, and they be buying. And I say, you know what? Right, I'm gonna put together a course, but it's not for y'all to buy, right? Y'all can have access to it grandfathered in, right? Because y'all pay y'all monthly subscriptions, whatever it is. If it's $10, if it's $30, if it's $8, whatever it is, $10, $15, $8. I can't remember what it is. The most expensive one is like $30. And I think the least expensive one is like $10. And if you throw back gang, I think it's like $8 or $5 if you throw back. Right. So Seawalk, when I dropped the course, right, even though he had a free link, right, he was the first person in the gang to just pull up and buy the course. Right. And I didn't expect anybody in the gang to actually buy the course. Now others followed, right? Shout out the others that followed. I don't know everybody who followed. I don't know all of them off the top of my head, but I remember Seawalk because he was the first one. He was the first one. And when I saw it come across, I'm like, wait a minute. Like, he got the free link. Why did he, you know what I'm saying? Why did he buy it? You know what I'm saying? Because I told everybody, ain't no pressure. You don't have to feel pressure to try to go and buy it and yada yada you know what I'm saying? But that just touched me that somebody who had, you know what I'm saying, free reign to go do it and get it for free, who I wanted to do it for free, you know what I'm saying? Because it's like y'all like family, you know what I'm saying? And y'all already then got this same material over and over, just not in this nice, pretty package. You know what I'm saying? And I'm like, I can't just be I can't be leeching my family dry. Just, you know what I'm saying? Penny in there, penny in there, penny in there, $20 here, $50 there, $6 there, $100 there, $1,000 there. You know what I'm saying? It's the same information, right? But to show that support like that right there, that it just stick out of my mind because that's the first one. Just like you go to a shop and people have their first dollar up on the wall because that first dollar meant a lot to them. You know what I'm saying? And I appreciate that. Salute you with both hands. You hear me?
One thing about that first dollar, that's a lie. Because people come in stores, they just don't spend no $1. But go ahead.
Ladies and gentlemen, if you hear something coming from your left over there, we call that the peanut gallery. Please, please ignore. Please do not feed. Please do. Hey, speaking of that, I was the other day, my son had a trip. He was going on a trip to Atlanta with his school, right? And my older son, he graduated from the same school last year. They was in high school together, right? So now my youngest son is a junior now, right? And so they was getting ready to go on a trip. and I said, look here, son, don't y'all get up there in Atlanta and get in trouble like Timothy and them class did. Cause the class of 2025, they was on something else. And you don't want to know the emails we was getting from the administration about the class of 2025, right? And so he was like, hey, Dad, the Timothy and them class, they was burning spoons. They was on something else, right? Now I'm thinking they was burning spoons is some kind of colloquialism that the young kids use for saying they crazy. You know what I'm saying? So we ride in I was like, and I just laughed. I was like, okay. So we riding in the truck, right? And then he getting out. I said, again, son, don't go up there getting no trouble like Timothy and them class did. He said, no, they, you know, like on our field trip form for the zoo this year, it said it was either this year or last year. He was like, our field trip form for the zoo, it said, please do not feed the monkeys pencils. And that was because Timothy in them class was feeding the monkeys pencils. And then when they was at the holiday social, they used to have real little candles with flames that was burning on the on each table. They had to go to little lights because Timothy and them class, everybody in there was burning the spoons on the candles. I said, oh, so they was literally burning spoons. He said, yes, they was literally burning spoons. Boy, the class of 2025, I tell you, boy. They got banned from the zoo. They got I can't remember if they cut the field trip short, but after class of 2025 went to that zoo up in Atlanta, they were not invited back. They were banned from the zoo. They could not come back. And then the next time they went back, Chris said the permission slip said, please do not feed the monkeys pencils. everything on a field trip form coming out of that school now, where is some kind of rule on there, was established by the class of 2025. All of the parental guidance that you got to sign. Thank you, class of 2025. Now, let's get to it, man. Y'all ain't came here to hear the adventures of Super Dad. Y'all came here to look at the price action. All right. So looking at the chart right here, somebody came into my comments. I was at lunch today. Let me share. I want to share this with y'all. I was at lunch today, and every now and then I'll pop out there on my YouTube dashboard to see if anybody left me a comment. Right? I will pop on my YouTube dashboard to see if anybody left a comment, if it's anything I got to respond to, you know, and I responded to it already. Now I got to figure out which comment it was. Let's see. That's it right there. Somebody popped up. I don't know why these people pop up in my comments like this. Like they should know by now. You can tell they really don't watch my channel because they know I go back and forth with them at random. So I'm assuming this is supposed to say can, right? God dog it. Oh, I clicked on his channel, right? It says anyone, I'm assuming that's supposed to be can, anyone can read the market after it already happened. It's just like a lagging indicator. I said, ding, 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 ding. Tell him what he won, Bob. Buddy, does not the thumbnail say intraday price action recap? When you look at this thumbnail, does that thumbnail not tell you what we're about to do? Does that look like clickbait at all? It says intraday price action recap. What does that mean? That means that we are looking over something that has already happened. But Captain Obvious, Captain Obvious wants to take his time out of his busy life, his busy day of biting erasers off the ends of pencils, and say that anyone can read the market after it already happened is just a lagging indicator. Well, if you don't take your butt back to West Virginia somewhere. Woo. Anywho, back to our regular scheduled program, right? Do y'all, gang, do y'all think I only talk about the market after it already happened? Have y'all ever seen me talk about the market before it happened? Have y'all ever seen me talk about something that should happen in price and then it ever happens? Has that ever happened before?
3, 4 times a week in the morning.
Man, hey, I just be trying to offer a service to the community, and people just want to come in and have something to say, man. People just want to come in. Me personally, right? Me personally, I don't even waste my time writing negative comments on people videos, right? If I don't like something about somebody's video, I just don't go back to their page. I don't waste my time writing negative comments on people's videos. Right? The only time I write my thought on a video is if the person in that video asks me to share my thought. If they ask me to share my thought about their video below, that's the only time I write my opinion about it. Right? Outside of, hey, this was a great video. I really enjoyed it. But in a critiquing type way, that's just not me. I just don't go to people's page and write. Like, I see videos that I think suck all the time. Right? I see videos where people are like talking about the ICT concepts, and from what I know about them, it's absolutely wrong. But I don't go in there and be like, hey, you're doing it wrong. Oh, you're doing it wrong. You're so wrong. Right? That's not the way I understand it. So hey, it is what it is. Right? I don't go to people page who trade chart patterns and be like, hey, you're dumb for trading chart patterns. Them things don't work. People are making money. They making money trading chart patterns. Who am I to tell them it don't work? I don't know. Anyway, right? Looking at the week's price action. Okay. If we come over here and turn on, boop, y'all see that little purple box that just lit up on the screen, right? That purple box up there, the one that's flashing on and off, right? That right there is what they call a new week opening gap, right? I'm flashing it on and off so to get your attention. Okay, let me make sure I'm sharing my screen. Yes, I am. All right, I'm flashing it on and off. I appreciate y'all in the YouTube chat that was answering that. Here to learn and share and Kim. I moved something out the way and I saw y'all answering over there. All right. So this is the new week opening gap. For those who don't know what a new week opening gap is, that's in the chat. Right. The new week opening gap is where price closed, the difference between where price closed on Friday to where it opened on Monday, which is Sunday night at 6 p.m. Right. So Friday's trading and Monday's trading for the futures, right? It closes at 5 p.m. on Friday, which today is Friday. So at 5 p.m., the futures market closed, and it won't reopen until Sunday evening at 6 p.m. Right. So whatever the price closed at today for the NQ, if you look right over here, if you can see that, can y'all see that 24,726.50, right? That is the price where the NQ futures closed on today, Friday at 5 p.m. Now, Sunday, September the 28th at 6 p.m., the NQ futures are going to open again. And when they open, if the price is different from 24,726.5, right? Whatever the difference is in that price, that is your new week opening gap, right? It doesn't matter if you don't see a physical gap on the chart, right? Because if we come over here, and in this case here, you can actually see a physical like difference in between these two candles, right? Even though the wicks are overlapping, right? You can see there's a physical difference in one candle closed here and one candle opened there, right? So this right here is a new week opening gap, right? The difference between this closing price and this opening price. And this is a bearish new week opening gap because it opened down. So on this Friday, the price closed at 24,861 even. And then this Sunday, price opened up at 24,850. So that's a 9-point new week opening gap. Right? And the difference between a new week opening gap and a new day opening gap, there's no difference. It's just instead of going from a Friday to a Sunday, it's going to the next weekday, like from a Monday to a Tuesday. a Tuesday to a Friday, Tuesday to a Wednesday, Wednesday to a Thursday, Thursday to a Friday, right? It's the same concept, except for Monday through Friday, it's called the new day opening gap. And then Friday to Sunday, it's a new week opening gap because you're starting a new week, but it's the same concept. All right. Tracking. Okay. There's a lot of things the new week opening gap can be used for, right? But visually, it's showing you exactly where your new week started, right? Without even, because if I turn it off, right? If I turn the new week opening gap off, right? I got to come through and say, okay, this week started right over here, right? I got to scrub around and looking at my little date stamp down there at the bottom. You can see it moving around. I got to kind of hunt and look for where the week started, right? I'm a visual learner. Okay. So if my new week opening gap is on there, I can see immediately the week started right there. That's where we started this week off in price, right? That's where we ended the prior week off in price, right? Now, this purple line down here at the bottom and this purple line up here at the top, that's the high of the previous week, and that's the low of the previous week. All right. That's the lowest price traded in the week 14th, the 15th through the 19th, right? The 15th through the 19th. This is the lowest price traded during that week, and this is the highest price traded during that week, right? So I can immediately know this is my weekly range from last week. This is my weekly dealing range from last week. So coming into this new week, I can visually see, right, that last week created a bullish dealing range, and we closed up there at the high of this dealing range because this is the highest we went during the week, and this is where we closed the week off. So we created a bullish dealing range because I can see from the price action, right, we came down and then we went up, right? How do I know that? Because that's the lowest price went during the week, and this is the highest price went during the week. And I can visually see that it's going up, right? And if this is the lowest that it went, that means from this point that way, it had to begin somewhere, right? And where did it begin? Right? It began right there. Y'all see, I just turned on another new week opening gap. Boop. Now I know where it started. So I know it started here, it went there, it came down here, and then it went there, right? And so now I can visually see, right, without any tricks or bells and whistles or anything like that, that the week of the 15th through the 19th was a bullish, right? It was a bullish, that's a plus sign, power. Let me make that plus sign smaller because it looked like a T. It was a bullish power of 3 week, right? Why do you say that, Tim? Because looks like we're on the right side of yes, very good. It does look like we're on the right side of a market maker sell model, right? Because this is where it started right here. So we consolidated there, right? We went up, we dropped down, and then we went back up, right? So this little up and down move right there, right? That was just manipulation, right? Because it was fooling people to think we were dropping, right? We're at all-time highs and we break lower. Oh, they ready to sell now. You're at all-time highs, you break low. That's just manipulation, right? So what do? We had accumulation, manipulation, and distribution, right? Power of 3, accumulation, manipulation, and distribution, right? Just by physically looking at, we started here. That was the lowest low. That was the highest high. I see we came in, we manipulated, and we went up and we closed up here, right? Bullish power of 3 week. All right, we just had a bullish power of 3 week. Now I'm looking at my new dealing range right there, coming into a new week. This is where we started at here. Boop. We coming into a new week now, right? We're up here, right, in a premium, right? We're up here in a premium when we open up, right? We talked about this before, okay? We never want to buy in a premium. We always want to buy in a discount, right? Now, you say, Tim, if you want to buy in a discount, right? How am I going to, if I need to buy in a discount, I need to wait until price, right? If we run a Fibonacci tool from the lowest low to the highest high, right, of our dealing range, you'll say, Tim, I need to wait for price to come all the way down below that line right there before I buy, right? And if you're trading based off of this dealing range right here, from right here, right? If you're trading based off of this dealing range right here, this is what you're looking to trade off of, you would be correct. If you want to buy and this is the dealing range that you're using, you would be absolutely correct, right? Absolutely correct. Oh, that's my raised hand. I'm like, who got the hand raised? That's my raised hand. How do I lower my hand? Get down that lower hand. All right. You'll be absolutely correct. Now, the beauty of dealing ranges is when you understand how to utilize them, right? First of all, when you understand that time and price is fractal, right? Everything that you see can be broke down into smaller fractals. All right. And when you understand dealing ranges, you understand that once the dealing range is established, right, you want to look at it to see if it has any portions that are efficiently delivered, and you want to look at the latest displacement of that dealing range for your trading opportunities, right? So this is where this week started at, right here, right? So this is our dealing range. This is where this week started. Once the week starts, you want to look at your dealing range and say, this is my entire dealing range that I'm looking at, right? This is the premium. This is the discount. It's a bullish dealing range. If I only want to buy, I'm only looking for reasons to buy. Okay. Now I say, I want to buy in a discount. This is the discount of my range. Now I need to look at my dealing range and say, is this discount area already efficiently delivered? If it's already efficient delivered, which it is, we got buy side delivery, we got sell side delivery within the discount of my dealing range, right? Then you say, okay, that's efficiently delivered. Now I need to look to where the elephant stepped in the pool and created some displacement in the dealing range above that. So then I see here, right, from this area here, price displaced away again, right? And then looking at this area here of this bullish dealing range, right? Of this dealing range, I see here from right here up into this point here, right? Price has gone up, it has come back to a premium, right? I mean, a discount. It has consolidated again, right? And then it has displaced up again, right? So I say, okay, all of this has been efficiently delivered and we displaced up again, right? And we have extended right? We've extended this portion right here. We had this area here, then we extended it up to here. Now we've extended it up to here, right? So this area here, right? Now that right there is that piece of the dealing range there. So we come here, right? Matter of fact, you can go to that portion there if you want to, but we're just going to include that all in this. So now we're going to come here to there, right? To the high, right? This is the high there. And then you come here, right? And you can anchor it there from when we're leaving that area, right? Like I say, we can include that, or we can come all the way to the bottom here, right there. But we're going to go to there when we're leaving this area that's efficiently delivered, right? And now that's going to bring us to the latest displacement, right? That's the latest displacement inside this overall bullish dealing range. All right. Right. So that's your latest displacement right here, this area right there. Right. And what does that look like when the week starts out? Right. This is how it will look starting out the week. Uh-oh. Took too many candles off. Put too many candles back on. All right. Boom. That's what it looks like going into your week. So now going into the start of this week, right? Going to the start of this week. And this is stuff for, you know, if there's any trolls that's stopping in later and watching this video. Let me go full screen for this. If there's any trolls that stopped in later and watched this video, we talked about this last week on either Sunday or Monday. Whenever it was either Sunday or Monday, but it was prior to any of it happening, right? It was prior to any of it happening. We talked about this exact same stuff right here, prior to any of it happening. Okay. Okay. Now, so now this is your latest dealing range, your latest expansion for our overall dealing range. Now, I asked the gang, right? I said, gang, this is our latest dealing range right here. What type of dealing range is this, right? Let's do it again. Gang. What type of dealing range is this right here? Bullish or bearish?
Bullish.
Bullish dealing range. Right here, when we closed, and right here, when we open. Now we open in our new week. It's a bullish dealing range. Should we be looking for reasons to buy while price is right here? Yes or no?
No.
No. That same way it went. The same way it went last week. I'm repeating the questions for the haters, right? Why are we not looking for reasons to buy when price opens up right here? Why do we not want to buy? It's a bullish dealing range. Why do we not want to look for reasons to buy right here?
We buying the discount. Do we still in the premium?
We buy in discounts and we're still in a premium, right? Okay. Simplest. Just end it right there. Just that simple right there. Right. So we said you buy in a discount, you sell in a premium. We said that this is your overall, this is your weekly dealing range right here based off of what we did last week, and we're starting a new week, right? We are in a bullish dealing range. We're in a buy program, right? We should be looking for reasons to buy. But when we open a new week, we say we're in a premium. We only buy in discounts, right? So we're not looking for price to come all the way back down here before we buy. Remember, we said from this low to this high, if I can anchor it in the right spot, right? We said that this was equilibrium and this would be a discount. But since we understand how to use dealing ranges, We're not looking for a price to come all the way down here before we look for buying opportunities, right? We're going to look for our latest expansion and look for buying opportunities in the discount, right? And then if we go ahead and just put the meat back on the bone, right? Oh my goodness. What happened right here? What happened right there? Let's see when that is, right? So right here, this right here is London time frame, right? This right here is at 3:15 in the morning, right? This over here is 10 a.m., right? What time does the NASDAQ futures for the New York session, right? It's a New York index, right? The NASDAQ future for the New York session, what time does it start trading for the US markets? 9:30.
9:30.
Very good. 9:30. Thank you, Kim. Thank you, Deborah. Right. It starts trading at 9:30. Okay. So when we zoom in here on this 15-minute chart, right? On this 15-minute chart here, remember when we said that this right here was the latest expansion of our dealing range, right? We opened our new week here, right? For Monday's trading, right? We traded down into a discount. We came down to a discount PD array, right? We hung around here. We hung around equilibrium for a while. And then a very specific time came into play, right? A very specific time. Speaking of time, right? We have this little graphic that we like to pay attention to sometime here if I get in the right folder in the gang, right? And we call it the time is king graphic. By the way, if you purchase the Smart Money Manuscript, the time is king graphic is available as a download. And what chapter is that? Who taking the Smart Money Manuscript right now? What chapter is that in? It's the first, I think it's the first video, first lesson in the ICT section, I think. Don't quote me on that, but I think it's the first lesson in the ICT section because I got a disclaimer and then saying that these are all Michael J. Huddleston's concepts, right? And then I have share my screen again, right? And then I have a download link for the slides. Oh yeah, you get all the slides also. And I have a download link for the Price is King. Time is King right here. The first lesson right there. Time is King, right? The Time is King lesson. And when you look at the Time is King lesson, you see here, there are your slides, SMM lesson 10. So it's lesson 10, right? So lesson 10, Time is King. The Time is King graphic is available inside the Smart Money Manuscript there, right? And it's been linked many a times inside my chats and stuff like that. If you want it, it's out there somewhere, right? So time is king, and a very important time happened, right? What time is that? Let's mark it out here on the chart. We ain't gonna spend this much time on every day. We gonna get to it, right? When we come over here, we see right here, this right here is our 9:30 open, right? And then this right here, if we come here, 7:30, that's our kill zone open. That opens the kill zone, right? Right. So that's the New York morning kill zone, New York AM kill zone. All right. Okay. All right. Very important times here, right? So we got the New York AM kill zone, right? We got the New York open, right? So now, anytime, right? When we look here, right, we have a day trading, right? So for an entire day, right? For an entire day, right? All of this right here is what happens inside of a day, right? So inside of a day from 6 p.m., right, to the following day at 5 p.m., right? All of this right here happens. Okay. So as we see over here, right? New York AM kill zone, right? From 7:30 to 12 p.m. Right? This is your New York AM kill zone. What's significant about this? This is the time when you can start looking for the ICT concepts to play out at the highest degree of probability during the New York morning session, right? So anytime between this window of 7:30 and 12 a.m., you're looking for these concepts you study to play out. Will it play out every day? No, it won't. Why? Because you need to understand where are you in the sense of price delivery, right? Is it time for it to play out in sense of price delivery? And is it time for it to play out in the sense of time? Okay. Patience is a virtue, grasshopper, right? So now we come into a very specific time right there, 7:30. At 7:30, right? Where are we at 7:30? At 7:30, we are in a discount of our current displacement leg of our overall dealing range. We're in a discount, right? So when we go into a discount, right, we're here consolidating. We expand up, create a bullish fair value gap here on the 9 o'clock candle. We trade back down into that bullish fair value gap, and then we start to move up, right? Right here, just as 9:30 is getting ready to open, right? Just as we're getting ready to open, price comes up and makes relative equal highs. Okay. Price comes up and makes relative equal highs. Let's annotate that. Okay. Just before price opens. Matter of fact, I used to have one that said relative equal highs, but I don't anymore. Right. We're going to annotate that. Okay. And now what I'm going to do, I'm going to drop down into some detail. Looking in my book, I took notes on time is king a year ago, right? We've been talking about this time is king graphic. He said we took notes on it over a year ago, right? Hey man, this stuff works. Okay. Now, what I'm gonna do here, right? Let's whack some of this off. That sounds crazy. September 9th, 2024, right? I'm take some of the price off so that we can look at this on a lower time frame without having to like scroll a million miles, right? Okay, so remember, this was the 9:30 open right there. Okay. Now I'm showing you the fractal nature of price here, right? I'm showing you I came to this lower time frame to show you the fractal. Remember I said everything can be broke down into smaller fractals. Y'all bear with me because I'm doing this on the fly. All right. So when we came back down into that bullish fair value gap, remember to drop down on the 9 o'clock candle, and then we moved up right there. Now let's look at the fractal nature of price, right? As we displacing away, right? This is our 9:30 open right here, right? Our 9:30 open. So when we're in a discount. We came down here, right? We're looking for reasons to buy. Price displaces up, right? As price displaces up, right? We rally up here and we get back to our new week opening gap, right? So we have gone above the current open and stop that consequent encroachment just before we get to the close of the prior day. All right, stop there. Now, if we look at what's going on in price, right? If we come over here, I'm just going to delete that. Right? If we come over here and go from this low to that high right there, right? We can see, yep, that's the right high. Before we started pulling back, we can see, right, that we've expanded our dealing range, right? We've bust outside of all this consolidation right here, and we have expanded our dealing range. Okay. What do we say about dealing ranges? When you look at the lower portion of your dealing range, if it's efficiently delivered, which this is, right? You want to go to where the elephant stepped in the pool and made the water move, right? So instead of anchoring at this low and waiting for price to come down into a discount here, right? Where do we go? To where the elephant stepped in the pool, right? We have a low right here. That's the lowest low from when the elephant stepped in the pool, right? If you say I want to use this low because that's where my order block is right there, fine. It's, they're close proximity, right? This is your low there at that order block / propulsion block, because this order block traded into another order block and then took off, right? So this right there, right? That low there, that's your low. This is your 9:30 open right there. Okay. Let's look at that 9:30 open with some close inspeculations, right? Close inspeculations. That's a real word, right? Who's been looking at the videos that Michael's been doing the teachings on, like the daily ranges and stuff like that? We had some watch parties, gang. I know y'all looked at it with me too, right? And we looked at it with some watch parties. Do y'all remember in the videos him talking about when the next day opened up and price trading above or below the closing price before making the real move? If you remember that, put a 1 in the chat or say, yeah, I remember that. We looked at it together. We talked about that. Yada, yada, yada. Right. Do y'all remember that? If you don't remember it, say I don't remember it, and I'll break it down real quick for you and tell you what he said. Right.
I don't remember.
Okay.
Yeah, I
Don't
don't
remember.
remember.
Okay. Were y'all on the watch parties? Go ahead and snitch on yourself. Were you on the watch parties?
Nah, I wasn't.
Okay. You good. Was you on the watch party, Jada? I'll take that as a yes. She's quiet.
Not
Okay.
all of them. Only some of them.
And I wasn't on all of them, not Tim. Don't do me like that. I wasn't on all of them. Okay. So, all right. So, what he was teaching, he was talking about trading at or near all-time highs. Okay. And so he said, when you're trading at or near all-time highs, you don't want to try to pick a top, right? What you want to watch for on your daily time frame, right? He said on your daily time frame, you want to watch your premium and discount wicks, right? And then not only do you want to watch your premium and discount wicks, you want to watch for when price trades above or below the closing price, right? And what the algorithm will do, we're going to come here, for example, the algorithm, right? We see how we open this one up below this closing price of that date. So when we open here, we see that the algorithm traded down and went below below the closing price here, right? We opened up below the closing price there. We went down, pushed it very far below that closing price, traded down here, right? And went below the closing price of this day, right? And then it snapped back and came back up. And then if you notice, every single day after that, right, we either opened below or we traded below the closing price of the day, right, before continuing up, right? So here we opened below the closing price. This day, we even traded down below the closing price of this day because we was already below this one and below this one. We opened up below these two, and then it took us on a wild ride to come all the way down, right, to go below the closing price of this day. Okay. And then every day after that, it dropped below the closing price, dropped below the closing price, below the closing price before continuing back up, right? Before continuing back up. And right, if we go and put the meat back on the bone, right, when we were coming down, right, price went above the closing price, above the closing price, above the closing price, right? Above. You know what I'm saying? We're it's like the prices. I'm looking at the what's the name, but we went above that closing price, right? Before coming down, right? So here we came below this closing and went up, right? Went above that closing price, came down, went back above that closing price, came down, went back above that closing price, came down, right? And every time it on the daily chart, it took us a whole lot farther, you know what I'm saying, to really suck more shorts in, and it pushed it up high above that closing price to suck more longs in, making people think, oh yeah, we fund the rally, right? Really tricking them in. Okay, we tracking. Okay, so we had all these off. Get it? Right? You understand that? You clear on that, Jada? You get it now? You Or is it like popping back? So
Yes. Yes.
all right. All right. So the price is manipulating below or above the closing price of the prior candle, which is a day in this sense, right? Closing, like manipulating above or below the prior closing, previous closing, right? And then going in the true direction. Now, going back to what was that? I need to put some let me put another candle on here. And then all right, I can leave all that on there because I ain't got to scroll that far. Right. Go down to the 1 minute here. Okay. Now, I was talking about the fractal nature and price. So we remember we're looking at the latest expansion of our dealing range, right? Before we look at the latest expansion of our dealing range, let's look at price. At our 9:30 open right here, right? What do you notice that price did right here. Now, this is a 1 minute chart. This right here is a 929 candle. This is our 930 candle right here. What did price do right here? Somebody tell me what price did here. It opened up, and where did it go?
Traded below
Traded below what?
the
What is?
close of that price.
Yep, traded below the close of that candle right there, right? When it went below the close of that candle, what did it do? It pushed it past that low right there. Guess what's below that low of that candle right there? On a lower time frame, that's a swing low. Guess what's below that right there? Sell side liquidity. Right? You don't believe me? There you go, here to learn and share. There you go. If you don't believe me, this is what we're gonna do. Right? I'm gonna draw a line from the open of this candle, right, over there to the close of this candle. I'd go past it because the close is at the start of that candle. And then I'm going to come down in here to like a 15-second chart. Right? And then we're going to find that spot right there. Right? We're going to find that spot right there. Let's go find it. Okay. Where's my line? It's 2 p.m. There it is. All right. So, all right, there's my line there. There it is. All right. So here we are. Here we would have to go even lower than the 15-second. We can't even get it on the 15-second, but on even lower than that, there's a swing low in here. We would have to go lower than a 15-second to find a swing low, right? But the algorithm is the algorithm. So, right, we're gonna find this swing low. Right, we're gonna find this swing low. Right, sometimes you gotta, yeah, price is fractal, man. Price is fractal. Price is fractal, man. Oh, wait a minute. Are they not showing? Did I go too far? Are they not showing on this time frame? Am I tweaking? I see those. Oh, this is Tuesday. This is Tuesday. I'm supposed to be on Monday. I'm supposed to be on Monday. That's why. Am I tweaking? Oh, I guess don't let me go. Oh, it don't let me go back that far. I can't go back that far on the 1 second chart. Look like it won't let me go back that far. But anyway, y'all get it. There's some liquidity there, right? Below a low. We see on the 15-second chart, there was a single low down there, but on lower time frames, there's some liquidity there. Y'all get the picture. Okay. So we drop down below the low and then we rally up. So same thing on a daily time frame, right? We drop down below the close, take it farther than expected. Okay. And then we rally up. Okay. Not only is that a fractal thing, right? Right. Not only is that a fractal thing, this right here, we said there was liquidity resting under here. right? And then we look over there, boom, right? What do we have over there, right? We have an order block here, right? Those are the bodies, right? If you want, if you look at it with the whole wick, that's the wick, right? So if you're looking at it, depending on how if you're looking at the entire order block, right, you're looking at the body, the wick from wick to wick throughout the entire order block, right? You're coming down, you're respecting the quadrant, the upper quadrant of that order block when we trade back down and take out that liquidity, right? When you look at the highest body to the lowest body, right? We're trading down to the lower quadrant, just looking at the body, because the bodies is the bulk of the trading, right? This is where you're looking for the algorithm to respond off the bulk of the trading, right? You're looking for hypersensitivity in the wicks, okay? Look for hypersensitivity in the wicks, all right? Speaking of wicks, right? See this wick right here? That wick there, as we come this way, this is a discount wick that happened prior to us opening right there, right? You see here, we traded down into that discount wick, respected consequent encroachment. When we traded down into that discount wick, come back down into the discount wick again, trading below the closing price, taking out the liquidity, still respecting consequent encroachment, went beyond it a little bit and rallied back up. All right. And just eyeballing this right here, I'm willing to bet that that's like right there at like a half of a half, right? Because how we always talk about everything. You can put everything into quadrants, right? And if we look at this right here and go from there and put it to there, right? Right, I'm willing to bet that that's coming right there to the half of the half, right there, right? But it ain't no algorithm. Thank you. Right. So then we rally up. All right. So once we rally up there, what are we looking at here? We're looking at the latest expansion of our overall dealing range. What does price do? It comes back down to a discount, right? It comes back down to a buy side imbalance, sell side inefficiency, aka a bullish fair value gap. It comes back down to, remember when we talked about this, we said price rallied up, right, and created these relative equal highs. Remember, we marked this out. We said it created these relative equal highs there, right? It rallied up, right, and came back down to where those relative, because we created them relative equal highs there, right there. So at 9:30 when we opened, we went above them highs and traded down into that same high, into that fair value gap, used it as support. That right there was your buying opportunity to participate in the move during the New York session to take price up, right? Buy in a discount, sell in a premium. You always buy in a discount and sell in a premium, right? And as you can see, buying there would have taken you up to here, right? And we map this out using the fib extensions, using the fib retracements, however you want to look at it. We use the fib retracement tool to get a projection of how high it can go during all-time highs, right? It reached up there to a valid anticipatory reactionary point, and we start to break back down, right? Once we start to break back down, we verify that, hey, right, we're looking to see if, let me move all this other stuff out of the way. Yeah, don't need none of this. I could have just deleted all that. All right. Right. So once we made that high and we start to break down, right? We start to break down now, right? We're looking to see, is that there a smart money reversal? Right. We're looking to see, is this the smart money reversal? We've taken out a weekly high. We've made new all-time highs, right? And we're starting to break down. All right. We said that on this 15-minute time frame, right? We got a bearish break in market structure after trading down below this low right here. Why is that? Because this low came up and took out a high, made a new high, and then we came here and we dropped down below that low, right? That gave us a bearish break in market structure on the 15-minute time frame here, right? So we'll mark out this low here. And for those that saying, Tim, I can't even see the candles. Who cares? You don't need to see the candles, right? You don't need to see like every single candle. We're looking at price, right? We're looking at price. All right. So on the 15-minute time frame, that gave us a bearish breaking market structure, right? On our 15-minute chart. Okay. Right. So bearish breaking market structure on the 15-minute chart there. So now our 15-minute intraday time frame is now right in a sell program. We got a bearish break in market structure. We got us a change in the state delivery, right? We're coming down. We're in a sell program, right? Now, if we are looking, right? If we come in here and look at this on a 1 minute time frame, right? If we come in here and look at this on a 1 minute time frame, remember now, we said on the 15-minute time frame, okay, we said on the 15-minute time frame that we had a bearish break in market structure here. All right. So when we're looking at it on a 1 minute time frame, right, when we said everything is fractal, right? When we look here, we can see that there is a very important, let's use him right there. Let's give him an evenly spaced face. Trying to give him an evenly spaced face. I'll just use him, right? There's a very happy, give him a nice size head too big. There's a very important face right there, right? And if we flip it upside down, we can see that he's smiling. I'm important, right? There's a very important high right there, right? What's important about that high? That high is important, right? Because we got lower highs on each side, and then all of them lower highs creates a swing high, right? So that high is very important, all right? And we got that very important high up there on our 15-minute time frame. We get a bearish break in market structure, okay? And before we get that bearish break in market structure on the 15-minute time frame, we get all of this back and forth delivery right here, right? Get a bunch of back and forth delivery there, right? So this is very efficiently delivered right here. We got a bunch of back and forth here. That's very efficiently delivered. So as we drop down here, right now, we're looking at all of this, right? And all of this as a balanced price range, right? So when we're looking from over here, right, all the way down to that low down here, when we drop down there, we're now waiting for price to come back above this line right here, which is equilibrium, to find a reason to sell. Okay. Now, when we come back up, right? So we got this important high up here, right? When we come back up into a premium, right? Remember what we said, okay? Remember we said we're looking to see if this was our smart money reversal because we had came up and we made a high. We hung out here for a while, right? Matter of fact, we hung out here until there, right? So we're looking at all of this right here as what? Time distortion, right? We're just looking at that as time distortion right there. Okay. So now we form this very important high up here and we drop, right? Why are we over here looking at it over here? Because this is when price started to move. So looking at where price started to move, right? We can see the institutional structure that took place just before that move, right? And just before that move, just after that move, we created this efficiently delivered area, and then we dropped down and got that 15-minute break in market structure. All right. So now, once we trade back up above equilibrium, right, where do we go? Do we go to some ambiguous point? No, we don't. We come right back there to that break in market structure right there. Okay. Come right back there to that break in market structure. And then you say, oh, Tim, we overshot it. Right. We overshot it. We went up beyond that. Right. Now, let's go in here and inspect what we did. Right. If we come over here to this side of the curve here, right? If we come over here to this side of the curve here, right? We came up above a short-term high, right? We came up into a propulsion block here, a bearish propulsion block there, because that's a bearish order block that's inside of a bearish order block, right? We had a bearish order block here. That bearish order block traded up into that order block and left, right? So we came up, took out liquidity, came up into a bearish order block, right? We have a wick inside there. We're respecting a quadrant of that wick. We're not going to draw it out, okay? And then if we go to the other side of the, what did I just do? I don't know what I just did. I saw something move, right? And if we go to the other side over here, right? Zoom out there. If we look right here, if we look right here, gang, y'all already know what I'm about to draw. But can somebody tell me what I'm about to draw out here before I draw it? Do y'all know what I'm looking at? Who want to take a stab at it? Who want to take a stab at it? Nobody? Nobody brave enough to speak up? Nobody brave enough to speak up? First.
Sorry, what was the question? I'm so sorry. I was driving.
Seawalt, go ahead, Seawalt. What you said?
You were marking out the high probability fair value gap?
Yes, right there. This bullish fair value gap right here, right? This was the first imbalance that was created when we left this area, right? This little area here, this was the first imbalance that was created before we took off, right? And took out that liquidity. That's the first imbalance that was created when we took off and started that grand up move, right? When we come back to the other side, right? When we come back to the other side of the curve, right? We're going to come here, right? What do you mean the curve, Tim? We're going to squanch it all back up, right? Because remember, when we had it squanched up, right? You can't even see that. You can't even see that right there, right? The algorithm saw it though. That's the first imbalance that was created when we took off here. When we come to the other side of the curve, because we're looking to see, is that the smart money reversal? When we get to the other side of the curve, right? And we trade down past this right there. Now we're anticipating this first imbalance, right, to act as an inversion fair value gap, because now the narrative has changed. And then what does price do? Right? What does price do? Where we at? Where am I? Jesus. Oh, right there. Okay. I'm like, Jesus, where we at? What does price do? Right? We go right back up. Move out of the way. Right? We go right back up. What do they call? What does Michael call this right here? See how we barely poked inside that? What does Michael call that right there? What is that?
Institutional order drill.
Institutional order flow
Flow.
entry drill.
Entry drill. Yeah.
Yep. Institutional order flow entry drill. Right. Right. No, that's not the Mohawk. The Mohawk is when it pokes just outside of it. Like if it come up here and it poke out of there, that's the Mohawk. But when it just dips in like that and goes, that's institutional order flow entry drill. Matter of fact, an institutional order flow entry drill is anything that just trades inside but doesn't close it all the way in. But the stronger institutional order flow entry drills are going to be just like this, just barely poke in and get gone. All right. So you say, Tim, it's overshooting your little area. Nope, it's going for a very specific reason, a very specific algorithmic reason, if you know what to look for. Okay. Then, right, we come down, right, and we trade down. And if you notice right here, right, we talked about this too before it happened, right? Right. And when we come into the concept of time and price, right? I said we weren't gonna go through every day like this, so we're not. I'm gonna do this one today, and that's gonna be it. Right. 9:30 open. Right. 9:30 open. We already said we think we're on the right side of a market maker sell model, because we was looking to see if that was our smart money reversal. We got our very important swing high up there, right? We break down, we come back to that bearish break in market structure. We trade up and to the high probability inversion fair value gap, right? And then we come back over here, right? And when we come back over here, somebody tell me if this doesn't look eerily familiar. We came up, made a high at an anticipatory reactionary point, right? Made a high at an anticipatory reactionary point, right? Then we came back and made a very important high, made a very important high, right? And then after doing that, we efficiently delivered price, right? Then after doing that, we efficiently delivered price, right? And then at a specific time, what happened, right? We're not expecting this important high to be taken at 9:30, right? When it's time for the New York session to open, we wake up. We went to some ambiguous spot, right? Very random, right? It kind of looks like a bearish break in market structure, right? That we got back over here when the algorithm showed you which direction it wanted to go, right? Bearish break in market structure. Kind of looked like we went there. And not only did we went there, we came over here and took out that high right there, right? took out that high right there, right? So we made our very important high. We came up here, took out that high right there, right? And then we dropped it like it's hot, right? Dropped it like it's hot. Gone. Price gone. Oh, wait a minute. Nah, I ain't gonna go there. I was gonna go there too, but I ain't gonna go there, right? Okay. No, you know what? I will go there. I will go there. If we look here, right? If we look here, right? If we come here, right? Right there. 7 a.m. I'll just come here. Go kill zone. Right. This right here, for those don't know, right there, that's 7 a.m. That's the start of pre-market. Right. And then this right here is like your kill zone open. All right. So I'll just go to pre-market because we always use pre-market. Right. So this here is 5 a.m. Right. Make sure I get my stuff together. Right. Right. So this here is 5 a.m. Right. This right here is right when, right? This right here is right when the London kill zone ends, right? This is when the London kill zone ends. All right. All of this right here, right? It's price action. It's usable price action. You can use it to see what price is doing, but this is outside of the kill zone. So anything that's inside the kill zone, right? Give or take a minute or two. It ain't like a hard, fast rule, right? Give or take a minute or two. But like all of this stuff inside here, like all, say all this stuff in here, you're putting less weight on it when it comes to the concepts, but you're still using it for what price is doing overall. But when you're looking for specific pools of liquidity and PD arrays, you're putting emphasis on the kill zones, right? And if you notice here, right? If you notice here at 9:30, when price spikes up here, right? Price spikes up there. If we take this, right, and click it and pull it over like this right here, right? We came above a liquidity pool inside the kill zone, and we traded into the first fair value gap that was created when we took off inside of this kill zone, right? Now see that cut through them candles. We took out liquidity from a kill zone, right? Took out traded into an inversion fair value gap inside the kill zone, and we left a very important high intact when this price spiked up at 9:30. Oh my goodness. I'm done on that.
Hey, this stuff work, man. Hey. Oh man, the price just went up. Huh?
The price just went up. The course 5,000 now. But on a serious note, what I've been trying to do today, and this is all just off the top of my head, based off of, let me do this right here like this for the haters. Now, all of this is based off of things that we said prior to it happening, right? Prior to it happening, right? We got gang members that tape read with me Monday, Wednesday, and Friday, right? We had some gang members that don't tape read Monday, Wednesday, Friday, but they came in and tape read with us on Wednesday, I think, and they can attest to it, right? When we're reading the price, some days it's crystal clear and we can say exactly what's going to happen. Some days it's not crystal clear and we say, because price is doing this, it should do that. And a vast majority of the times, right, we get it right. A vast majority of the times. And then on times when you just don't know, just be like, hey, I just don't know what price doing. We're gonna wait to see what it offers us, and we're gonna look for opportunities in here, not trade signals. We don't trade, we just looking at how to read the price, right? But this is stuff that we do every single day before it happens. We're just going back, reviewing the price to show you this is what you missed. When you didn't understand why it was going to that level, this is what you missed. And it was plenty of other things in there we could have talked about tonight, where we draw the quadrant levels of these wicks and you see how price reacts to these quadrants. And we talked about that all week, looking at how prices, if you take this away, y'all, who was on the other day on the day's live? Do you remember when I said, if I take these quadrant levels away, does it make sense for price to be stopping right there? No, it don't. But if you put the quadrant levels there, then you understand. Okay, now I see why prices did. Now I see why Tim was trying to trade that, or why he did that. Right? Now I get it. Now I get it. I know it's going to be some haters, right? Because I got haters be coming in my thing sometimes. They don't do it often. Back in the day, they used to do it a lot. But every now and then, they still be popping in with the hate. They still pop in with the hate. Pop in with the hate. Right? What's this? Tape reading session 926. Tape reading session 926. What do you mean processing? That shouldn't be processing from this morning. Tweaking. What's going on here? Price came down to that lower quadrant. Used it as support. Abu right? Goldnyam, whatever. Nah, I don't know that name. And this is, I hear you trying to come in trading around this time here, because I remember it was like, okay, Mikhail. I know Mikhail. When 2 o'clock hit, I was like, man, the London from the open, and that Abdul Balamaglada. I don't know that name. You got to prove to me you a real person. Put something in the chat and say, Tim, I'm a real person. I'm not gonna come in here and be crank yanking if you let me in your Zoom. But if you don't do that, you can't come in. I don't know that name, right? Cause we having people crank yanking. All right. Level here and a quadrant level there, but it was the gradient between the two fair value gaps, and he would have you trading from like, even when I was stopping right there in your mind. Oh, here it is right here. Algorithmic principles, but I can't remember which one it was, but we was talking about it, and he was doing the teachings about close proximity fair value gaps, and was grading. He had us grade the fair value gaps and was using those as your ranges to trade inside, right? And we would have like a quadrant level here and a quadrant level there, but it was the gradient between the two fair value gaps, and he would have you trading from like level to level, like, you know what I'm saying? I don't know if y'all because they real thin. I don't know if y'all can see them quadrant levels, but it's like a quadrant line quadrant here, levels one there, throughout one there, the day, because it's based off here, algorithmic here, principles, here, right? Because algorithms just run on math.
They like, but we can see
them. It's run on numbers. It understands I made this PD array. These are the numbers.
I made this PD array. These are the numbers. It know how to go in between and seek those numbers, right? And it's the same concept with these quadrants on different things that you can utilize them, because if you did not have, right, if I did not have this quadrant level right there, right, would it make sense for price to be stopping right there in your mind? Right? What if it's like when you got the quadrant level sitting there, it make all the sense in the world. Oh, I see it's being supported by that quadrant level right there. But if you did not have that quadrant, if you did not have them quadrants on there from those premium wicks, I mean those discount wicks, what sense of God's great understanding does it make for price to be stopping right there?
All right. Now,
Right?
when we go back
Different
to
things that you can utilize them, because
go
your
back to
range
what
is
the-
to trade. I'm talking about great
what the wicks
of yesterday's wick charts, Tim. But
I was trying to
and
find
I
it when
think I
explained
end up your value gap. I graded the wicks and
All right,
just
there you go. Right there.
show. If you all are wondering what that stuff is,
And this is from this
if you
morning's
all are wondering what that
tape
is,
reading session.
Oh, okay.
what's going on, Empire Tradings? What's going on, Yolanda? Y'all come on up in here. Yeah, I was doing a little button pushing last night, trying to see if I could find me something worth engaging with. So I got some stuff marked out on a charty tart here. I'm trying to find it. Yeah. Okay, there it is, right there. Yes, it is. All right. So we're inside the daily fair value gap. Yes, they were traded down to this daily fair value gap. And I was just watching this discount wick and this discount wick here, because that's what price was trading in between at the time and inside this fair value gap. So instead of grading the fair value gap, I graded the wicks and just showed the fair value gap on the daily chart, so it wouldn't be a big green blah on the lower time frames, because all that stuff starts to kind of overrun each other and it just be doing something to my eyes. So that's what that is there. And as we see there, price came down. Right. Once we opened up the day here, price came down to that lower quadrant, used it as support. Right. And then ratted up. And this is when I was trading around this time here, because I remember it was like when 2:00 hit, I was like, man, the London. I just noticed right there, I said lower quadrant, but that's the upper quadrant of the lower wick. And this right here is up here is the lower quadrant of the upper wick from the open. And I started to sit up and wait for the London. But then I just got off. I got off the charts because I was wanting to go back to this buy side up here. And I think I end up, I think I got like stopped out in profit. So I don't know if I got stopped at the opening gap and over here somewhat. London, because it's after 2. Because I remember wait for the London. As you can see, we came down to that upper quadrant of that. All right, so that's yesterday's wick and Wednesday's wick. So yesterday's wick is below, Wednesday wick is above. And as you see, we came down to the upper quadrant of yesterday's wick, used it as support. All right. And then we moved up to the lower quadrant of Wednesday's wick, used it as resistance. right there, that buy side. Then we moved back down to the upper quadrant of yesterday's wick and used it as support. And then we moved up to the upper quadrant of Wednesday's wick now. And now we're pulling back, right? We went to the upper quadrant and then see how where you, and this is where I showed where those wicks came from. And then I was talking about how we can see, understanding how to pick the PD arrays to watch to see how price reacts. It's clear to see, oh, we're using that upper quadrant as support. Oh, we're using that lower quadrant as resistance, right? And for the haters that's saying, oh, but you're still talking about it after it happened. You hear me when I came in, I was explaining this the same logic I was looking at when I was trading, right? And then for the gang, right? I don't share my trading stuff publicly because it has money involved in it. But I got screenshots in there for the gang talked about some trading that I was doing this morning, right? And then you can also see um the profits from when I was talking about these trades from last night. The trading from this morning, yes, it was, it was a bigger trade, it was a larger trade, so it was larger profits, but the smaller profits that was on there were from the trading that I was doing during this time. And you heard me explain it because I was looking for that buy side and I got stopped out in profit over here somewhere when I went, because I was watching the highs. I can't remember if I trailed it after I cleared this high or this high, but I got stopped out in profit because I was shooting for it to come back to that new day opening gap and then it ultimately to the highs, right? But once I get so far in profit, I start locking in my profits because I'm in this to make money, not to look good on the internet. But that's something I just want to come to this because this is the type of things that I was saying we could have talked about, showing like stuff with quadrant levels. And this was the easiest way for me to do it by just going to this video because we just talked about it this morning. But you also see it's like these these levels that we got there for a reason, right? Those levels that we got there for a reason, we still be utilizing them throughout the day, right? All throughout the day. Those, if you go in and run them levels, right? If you go in and run them levels, you'll see that we still be utilizing them all throughout the day, right? It don't never stop, right? It don't never stop using them over and over and over and over. Because you understand where to mark your charts, right? If you understand where to look, right? If you understand where to look, right? Never ever fails, right? If you look there, you can see that we came down to medulla oblongata left. They was trying to get me. He was trying to come in here and go to crank yanking. They left, right? Right there. That's consequent encroachment, right? Of that wick, right? Because remember when I was talking in the morning session, we had came to the upper quadrant, right? We was sitting at that upper quadrant, right? And then we had traded up to the lower quadrant of this one here. And then we had went up to the upper quadrant, I think also. So we had stopped there, went there, came there, went there, right? And then if we go back down, drop down to like a 15-minute time frame, right? This is our 9:30 here, right? That's our 9:30 right there. Oh, that's 10 o'clock. That's our 9:30 right there. Right, our 9:30 open. Okay. And I got the low and the high there. Right. I got the low and the high there. On the other time, I didn't have the low and the high there. But if you look at the low and the high, right, you got sensitivity in that area there too. So the low of the top wick, right? That's the low of the top wick there. And this right here is the high of the bottom wick, right? That's the high of the bottom wick or the body of the candle, right? And you can see the sensitivity right there at those levels too. So all of these levels got sensitivity. Why? Because old lows and old highs are PD arrays too, right? And look where most of the consolidating is, right around that convergence right there. But there's no algorithm, right? So you can see where we was talking about we was trading in between these areas right then at 9:30, right? At right over here. If I get on the right day, y'all got me on the wrong day. All right. Y'all got me on the wrong day. 9:30 right there. Right. So if we come over here at 9:30, right, you see here, right, let's talk about we open here. We came down to the upper quadrant, went to the lower quadrant, came back down to the upper quadrant. This is what we was talking about. I was in here trading during this time there, right? We rallied all the way up and went up to the high, right? We went all the way up to the high, right? Then we came back down, came down to consequent encroachment, right? Came down to consequent encroachment. Then we went all the way back up to the upper quadrant, pulled back a little bit, right? Hung out of the upper quadrant, pulled back up to the high, then pulled back, right? But those same levels that we marked out looking for trading opportunities, right? What was the algorithm doing? The algorithm, and it was over here where I took the trade that I shared with the gang, right? Somebody, I think it was Deborah, was like, that was a good trade, that was an amazing trade or something like that, right? Shared with the gang was right here in this area, right? Looking at price action right here, right? In hindsight, looking at price action in hindsight, right? Does there look like anything in here that would be an amazing trade inside this area right here, right? Does it look like anything that'll be an amazing trade? I give you my honest opinion, no, right? Right? I give my honest, just looking at this in hindsight, looking right there, I give you my honest opinion. No, it don't look like anything that would be an amazing trade. All right. But this is the one. Yeah, this is the one without any money in it. All right. That's the one without any money in it. But I shared this with the gang, right? Breaking down my analysis of why I took a trade, right? Breaking down my analysis of why I took a trade. Okay. Because when you understand order flow and price delivery, right? Even in the midst of high resistance days like today, right? What do we say, gang? What do we say the type of day we expecting the day to be, right? We said today, we was expecting today to be what? What type of
A
day?
nothing burger.
A nothing burger, right? Meaning we looking for an inside day, meaning we're looking for a day that's not expanding or running off or continuing, right? So when you're looking for an inside day, you're looking for a nothing burger, right? You anticipate price to keep drawing back towards what? What do you anticipate price to keep drawing back toward?
Opening prices.
Opening prices, right? So if you're looking for price to draw toward opening prices because you anticipate it to be an inside day, a nothing burger, a consolidation day, right? When you come to an anticipatory reactionary point like a consequent encroachment of a discount wick, and you're looking for price sensitivity, discount sensitivity there, and then you get that discount sensitivity, you trade to it, and then you reject off of it, right? Once you get that discount sensitivity, you're anticipating price to want to draw back where? To a open. We have a 9:30 open right there. We have a midnight open right there, right? We got a new day opening gap somewhere in the midst right there. We got a new day opening gap there. So you got a opening price, a opening price, a opening price. You're anticipating price to draw back toward the open, right? And then when you're below your new day opening gap, right, and you're in a consolidation, a range bound, a inside day, a nothing burger, you know from the teachings that the new day or new week opening gap can act as a magnet to price, right? So when you're on your 1 minute time frame, right? Get out of here. When you're on your 1 minute time frame, we're going to come in here and we're going to chop this off here. We'll chop that off there, right? So when you get that reaction off of this right here, right? That's your reaction, right? I'm highlighting that next candle because that's when that candle closes, right? When I get this reaction, that's when that candle closes, right? And I'm watching, God dog it. I'm watching my 1 minute time frame like this right here, right? I'm watching my 1 minute time frame here, right? That candle closes. That just gave me my reaction off of my discount PD rate. So when I trade back down into a discount, right, I could get long here. I didn't get long there, right? But I wanted to get long there. But why am I not getting long right there, right? Because I haven't had a change in the state of delivery yet. So I'm being patient and letting the algorithm offer me a change in the state of delivery first, right? When does it offer me a change in the state of delivery? When this candle trades right here and offers that price right there, right? When it offers that price right there, the opening price on this group of down close candles right there, that price right there, that's my change in the state of delivery. That's my bullish order block. So when price trades above that down close candle right there, it don't got to close above it. It just offered it to me. Now I know that I got a change in the state of delivery, right? I've got discount sensitivity off of this wick. Now I know I got a change in the state of delivery, right? So now I'm watching this wick right here, right, to see if this wick is going to try to offer any kind of resistance to push me lower, right? Because it's giving me a change in the state delivery. It has used this as support, right? I got an inversion fair value gap. I got an inversion fair value gap. It's giving me all these bullish signals, right? So as soon as we immediately disrespect this premium PD array, I'm gone, entering, looking for price to come back to the opening price, right? That's the open of the day right there. Okay. That's the open of the day. That's the 9:30 open. This is the new day opening gap right there, right? Where did price go after this expansion up? It went right to the open of the day, and then it pulled all the way back down, right? I got stopped out in profit right there on that high right there, right? That's the image that I shared right there, right? Told everybody why I was doing what I was doing, right? Why I was doing what I was doing. Shared the thing in the Discord. You know, is I don't share my money on public streams, but based off of those same, right? Those same lines that I had put on the chart and I was talking about it, right? Based off those same lines on the video. When we watched the video, I closed it somewhere and we was talking about those same lines. The only difference is right now you can see the open and the close, the high and the low. But if I take the high and the low off, right, it's the exact same lines, right? Those three, right? We was talking about trading the new day opening gap there, right? Our new day opening gap, right? We came, right? We came down to the upper quadrant, to the lower quadrant, back to the upper quadrant, right? Up to the upper quadrant, right? Remember, we was talking about all those same lines on the chart. Came down to the consequent encroachment. I took a trade, anticipating it to come back to the open. The exact same lines, everything we talked about, right? Before it got there. These are our levels that we're looking for reactions off of. All laid out beforehand. The same concepts, the same logic, right? Only thing you got to do is study the concepts, make it make sense inside your mind, internalize it, and then execute when all stars align. That's all I got, man. I said I wasn't gonna be on here long, and I've been over here for over 2 hours. I'm sorry for keeping y'all forever on a Friday, man. If y'all got something out of this, I mean, share it with a friend or something. Oh, there it is right there. That's the video I was looking for. It was still open. See the same lines, right? Right, the same lines right there. We can see them there. Up, down, up, down, up, down. Upper quadrant, right? Lower quadrant up here somewhere. Inside there somewhere. Upper quadrant, lower quadrant, up quadrant, up quadrant. Same lines.
Oh man, anybody can look at it afterwards and
Yeah,
see.
man. Anybody can look at price and say what it did afterwards, man. Anybody. All right, man. Anybody got anything for me? Any questions, concerns, comments? I'm glad Abdullah and Glada left. They was trying to get me. Abdullah was trying to get me. He was trying to come in and get the crank yanking. He was trying to get me. I said, no, sir. Quiet Millionaire. If Quiet Millionaire still here, I appreciate you. Hey, man.
Thanks, Tim.
Hey, ain't no problem, C-Walk. Ain't no problem. Let me see. What's today? All right.
I have a question.
Okay.
The other day you mentioned that if we were to go down on the daily, where was that? On September the 17th.
You say if we go down on the daily.
On the September the 5th, September the 17th candle.
Okay. Yeah. The weekly low, last week's low. Okay.
Yeah. You said if we were to go down, touch it, then it would be a high possibility that we continue more down.
No, I said if we go down below this right here, that'll give us a bearish breaking market structure on the daily time frame. And then what you want to do there, right? If we get a bearish breaking market structure on the daily time frame, you want to identify on your higher time frame, like your weekly time frame, is that a valid breaking market structure, right? Meaning, will that just automatically mean we're sliding bearish, right? Because if you look at your weekly time frame, right, we're still in a very much buy program, right? And on our weekly time frame, we don't get a bearish break in market structure until we trade down below this week of September the 2nd, right? And we have a weekly bullish fair value gap that's resting here. So the weekly time frame has a reason to retrace back down, right? Has a reason to retrace back down there. And that right there is not even a discount of the entire leg, right? So it can very well come all the way here and not mean that we are just going to slide down, right? It's just a normal retracement in the midst of coming down, right? Because for this overall range, it's not even a discount. But if we measure what we said, look at our dealing range. If the lower part is efficiently delivered, right? We anchor from the section where we left that area. So right now, this is our latest expansion. And the only thing we're doing on the weekly is coming back to our discount PD array, right? For an expansion, retracement, and a delivery, right? So on the daily time frame, trade in there would give us a bearish break in market structure. But since the weekly has a reason to come down there, that doesn't automatically mean we're going to go lower, right? You always want to know, based off your higher time frame, is this move, is this bearish break in market structure, is this bullish break in market structure allowable for current price action? You understand what I'm saying?
Yes, I understand. Another question, follow up very quick. So on the weekly, you mentioned that we should, well, there's a reason we should be going down to in a 50% equilibrium range. Does it have to go there before it takes out a new high?
No, price ain't got to do nothing, but you want to look at the signatures on the lower time frame to see what building blocks are being built, right? So when we look at our weekly time frame, we already established that this is our current expansion of our dealing range, right? Because going from God dog it, going from this low here, which is when we swept the liquidity and expanded up, right? That's what creates a dealing range. When we take liquidity on both sides, that's a dealing range, right? By definition, right? And then the algorithm gives us algorithmic dealing ranges with daily, weekly, and monthly candles, because that's an algorithmic time frame that it understands, right? So based off of our dealing range, the lower portion of our dealing range from equilibrium down to the low is efficiently delivered. So we're not anticipating price to utilize this entire range for premium and discount, right? We're only looking for the portion that has or that's inefficient in one of the sides, right? So now this is the only portion of the range that's only offered buy side delivery. It's inefficient. It's buy side, and yeah, it's inefficient of sell side delivery. So this is what we're looking for the range. So now that we see that, right, this is the range that we're paying attention to, right? Go ahead and hide all of this right here, right? So when you're looking at, right, we started here, we went up there and made a high, okay? And then this right here is the low, right, of that range. So now we're looking at that range, and these are the quadrants for that range, right? I just don't have the top and the bottom highlighted because I got the come here, right? I just don't have the top and the bottom highlighted because I got the high and the low on there. All right. So now on the daily time frame, right, we're watching this daily time frame because this is our weekly range that we're looking in, right? When we look at our weekly range, we see that we have internal sell side liquidity right there, right? Once we came up and we started trading back down, we got internal sell side liquidity. What is that internal sell side liquidity? When we go there and look, we see that that was last week's low, right? Because we had said that was last week's low. That was our dealing range low. Box bottom week, right? Box top week. Come on, Tim. Right? Go back to our right box top week, and then so This was the end of the week. This is this week's trading right here. This is this week's trading here, right? So before this week started, right, that high didn't exist. This was the highest high. That was the lowest low, right, of last week, right? And then that was the internal liquidity for our latest expansion, which was here, right? And that's when we opened up. We said we went up and then we pulled back down. Now, you're watching the price structure on the lower time frame to see what narrative is being built, right? So right now on the daily time frame, right, we have come down to equilibrium of our latest expansion of our latest displacement leg, right? Right, we came down to equilibrium. We made the highest high and we came down to a slight discount, right? So now you're watching now to see if that on the daily time frame is going to be used as a smart money reversal, right? Because the weekly, right, like we said, the weekly has a reason to come down here, right? I think we looked at that earlier. It got like, yes, it's a little volume imbalance there, right? So for the weekly time frame, and as you see here, we traded down just below consequent encroachment, right? But I'm including the volume imbalance. Michael teaches if it trades past consequent encroachment, you don't include the volume imbalance. But I've seen him do it when it just barely touches like that. I've seen him do it like that. But for the sake of exactly how he taught it, we're just going to mark it like that, right? And just remember there's a volume imbalance there. So looking at, right, the weekly chart, we have a discount PD array inside our expansion, right? And we got a reason to come back down to the discount, right, for a buying opportunity, all right, on the weekly. Now on the daily, right, you're watching to see what narrative is playing out. So on our daily now, right, we've gone up, retrace back, we've gone up, retrace back, right? So on the daily, right, we're still respecting bullish order flow, right? Coming, we'll talk about all this week. We have been talking about we have switched to bearish order flow on like the 15-minute, hourly, like the intraday time frames, but the daily was still in bullish order flow, right? So we've expanded up, retrace back, expanded up, retrace back, right? And now we're starting to expand up again. But since the weekly got a reason to come here, right, we're looking to see if we continue down and get that bearish breaking market structure on the daily, right? But we can't force it because we want it there. We got to look at what price is giving us as we build this. It's built from the bottom up, right? You get the overall narrative from the top down, but it starts getting built on the 1 second chart, right? So on a daily, we see we got a retracement back, right? Right now, we're respecting the weekly dealing range and we're still respecting bullish order flow, all right? We'll just jump down to 60 minutes, right? We're going to 60 minutes, right? And on the 60-minute time frame, right, we look here and say, right, we are on the right side of a market maker sell model on the 60-minute time frame, right? Where do we complete that market maker sell model? Down here where the weekly time frame has a reason to come to, right? We can clearly see a market maker sell model, right, is establishing, right? And the completion of that market maker sell model is here, right here. When we trade below that low there, right, coming below this little consolidation area right there, right? That'll complete these relative equal lows here. That will complete this market maker sell model. Where does that market maker sell model end at? Right at a place where the weekly chart has a reason to come, right? So
it gives you more of a probability to want to reach into this. But since the daily is still respecting bullish order flow, we have to come in and monitor the intraday time frames to see if it's going to keep respecting bearish order flow, just like we did on the 15-minute. We got a 15-minute breaking market structure, bullish bearish breaking market structure there. Right here was the hourly bearish breaking market structure. Right, we never looked to see what the 4-hour was, but right here was the 4-hour also. So that was the 4-hour and the hourly. Right, this same spot right here was the 4-hour and the hourly. All right, and for those who can't see what I just flipped through super quick like that, right, if we look at the 4-hour chart, right, looking at the 4-hour chart, this low traded up, taking out a high, right, and then we came and traded down below that low. So that low right there gave us a bearish breaking market structure on the 4-hour, right, and the 60-minute, right. That's the same spot. We got our bearish breaking market structure on the 60-minute, and then our 15-minute time frame. This was our bearish breaking market structure on the 15-minute, right. Now, all of these right here are intraday time frames, right. And with the intraday time frames, right, we take everything with a grain of salt when we're going against the daily time frame, right? Because the daily time frame is still in bullish order flow. So now the same thing with the daily time frame. If we come down and trade through and get this bearish breaking market structure on our daily time frame, right? Because this low right here, that low there came up and took out a high, right? If we come down and get that bearish breaking market structure, we have to take it with a grain of salt because the weekly has a reason to come there, right? And this is an area of anticipated support for the overall buy program, right? All of this is efficiently delivered, right? So in the grand scheme of the weekly time frame, we just expanding, retracing, and looking for delivery. Make sense?
Makes sense.
Yes. And it looked like on the daily, like you said the other day about the change in state of delivery, that price reacted to that as well.
Which one? Help me out. I'll be saying a lot.
The
Which
daily
one?
change in state of delivery, the daily bullish order block, is that on the daily? Is that the daily?
All right, on the daily chart right here,
Or was it on the weekly? The weekly.
the weekly chart
Trying to
on the
see
weekly.
what was I looking at? Must be the daily.
Okay, the daily. All right. So the
Where
daily.
price wicks down to the bodies of that bullish up down close candle with a long wick, like
The
6
down.
days before.
You say the
Like,
down over here?
yes, that one.
Okay. Okay. All
Can you
right.
use that like a sensitivity again to the order block?
Talk about this reaction right here.
Yeah.
Yeah, this, well, with this trading down here, and we getting this reaction, this strong reaction there, right?
Oh,
That,
that's off the quadrant. Okay.
yeah,
Okay.
when
Yeah.
we came down into this, right? Into this order block here, traded down below that closing price and got that strong reaction. That's why we was looking for this to act as support.
I see.
Right, because we got that discount sensitivity. So since we get the discount sensitivity, we're looking for this to act as support.
Oh, okay.
Right,
Okay. Yeah.
and since we had a large expansion, right, these large range days down, and we're looking for this to be an inside day, right, we're not looking for it to trade outside of the high or below the low. So we're looking at this discount wick and this discount wick as the areas we want to look for trading opportunities,
Oh, okay.
because we're not anticipating price to trade outside of this, because we've had
such a large move throughout the week, and then we're going into Friday, and we don't anticipate Friday to just continue, right? It can, but we don't anticipate Friday just knowing the typical Friday, right? You
I
can
see.
get
That,
days
that
when
makes
it,
sense. Yeah.
you know what I'm saying? So when it
Yeah, with
starts to
news and stuff.
show, when it
Yeah.
starts to show you signs, okay, I'm respecting these levels, I'm pulling back to the opens, I'm doing that. Now you know what I'm saying, you can understand, yeah, this is the profile that we're in. But yeah, you're trading down into this order block, into this quadrant level of the weekly range, and you're getting that sensitivity. So,
Okay, thank you.
right there. And yes, that it you did, we got like a change in the state of delivery here when we offered, what I'm saying? Actually, it'll be this price because it's 2 candles. So when we offer that price there, we got the change in the state of delivery. And then you see here, right? This first time we overshot it, like came way deep down, a lot farther than you expect. But this time when we came down, right, we came right inside there, respecting that order block off the change in the state of delivery, right, using all of this as support, right? And then we still watching to see if we're going to come here, right? And we got 2 more days left in September, and right now we are very bullish on the month, right? So August played out to script, right? September still not over, right? But September, if we go over here for the Qs, right? We're looking at the Qs, right? And we had QQQ there, right? So for September, over the last 5 years, right, with 4 years of prior data, right, 40% chance of closing higher than it opened, right, with an average return over these last 4 years, because it's 21, 22, 23, 24 of complete data, and then 25 is not over yet, right? On average, almost 3% down, right? If we extend it out to 10 years, right, still a 40% chance of closing higher than it opened, but over those last 9 years, it's on an average of almost 2% down, right? And then if we extend it out, can we go more? Yep, 15 years, right? Still 40% chance of closing higher than it opened, but it's almost 1.5% down, right? And then if we extend it all the way out further as we can go, 20 years, it's a 50% chance that it's going to close higher than it opened, but on average is flat for the Qs, right? And then right now, right, if we come over here, the NASDAQ futures is what I use to track the Qs. But if we come over here, right, and go to the Qs, it don't want me to go to it. If we go to the Qs and put it on a monthly chart, right now we are very up. So right now we're not trading within the norm, right? It's a 50-50 shot that you're going to close. This is where we opened on the month, and this is where we are right now, right? So you got a 50-50 chance that it's going to close higher than it opened across the whole history of the Qs. But across the whole history of the Qs, on the average return is going to be pretty much flat, right? So that means in the next 3 trading days, we will have to melt all the way off and come way back down here somewhere in order to close on average. The August, it closed pretty much in line, because when we look at the data, yeah, the average was a negative return, but when you look at year over year, you had 1%, 1.5, 5% down, 5% up. So we ended up closing with, from that close to that close, right, a 1% close, right? And so for this right here, I said down there, but it would have to come all the way down here, right? Because it's from the close, right? So it'll be closing higher than it opened. In order to close flat, it would need to come all the way down here to close flat, right? If just say if on average, right, if we ain't look at it year over year, but if you look at it like, let's go back and look at it year over year over the last 10 years, right? So over the last 10 years, right, 2016, it was 1.5% down. 2017 flat. 2018 flat. 2019 1% up. 2020 almost 6% down. 2021 almost 5%, almost 6% down. 2022 almost 11% down. 2023 almost 5%, 5% down. 2024 almost 3% up, right? And so and right now we're almost 5% up right now, right? So over the last 10 years, it's typically been super bearish, right? Last year, over the last 10 years, I think if I was reading it right, if I didn't read the wrong column, last year was the only year over the last 10 years that was positive in September. Right? Last year was the only year that was positive in September. Okay. And last year we had a positive August and a positive September. Right. And then this year we got a positive August and we working on a positive September. So it's not sticking to the historical norm, but it's in line with recent, like last year data. So historically, September's not playing out the way that it played out in the past. And I just contribute that to we're trading at all-time highs. And like Michael teaches, you never try to pick the top, because if you try to pick the top, you get caught up in the short squeeze. Because like you say, they just traded below that prior opening price. I mean, that prior closing price. They traded down below that prior closing price and then push it up. Trade it down, push it up. Trade it down, push it up. Right? So, yeah. I don't know. I be talking and get the rant, and I can't remember what the original thing was, but hopefully I crossed it in all of that talking I just did. um
No, thank you so much.
all right. That's it, man. I'm about to go warm up my leftover Fuji hibachi and see what's going on with this Florida State game. And tomorrow, no Q&A this Sunday. The Diamond members, I'll see y'all. Diamond members and YouTube mentees, I'll see y'all Monday morning for the tape reading stream. I appreciate y'all for hanging out with me all this time on Friday evening. Right, us old folks don't have nothing to do on Friday evening, so I appreciate all y'all folk hanging out with me, because I'm pretty sure y'all got something y'all could have been doing, but you chose to be here with me. So until the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action, it's your boy. Oh, wait before I go. Lump, wake up. I know you're sleeping. Shiroti, tell your daddy to wake up. All right. Until the next time I get on Al Gore's internet and decide to share my thoughts on this thing we call price action, it's your boy, Timothy Lee Rogers Sr., aka Aranya Grande. That's just Big Spot if you don't have low Espanol. Y'all be safe out here in these trading streets, man. Gone.